Hello and welcome to this brand new episode of Smart Money. In today's day and age of artificial intelligence, quantum computing, hyper-automation and industry cloud platforms, it is important to stay relevant with your investments too. So today we talk about innovation in investing, why innovation is important and what are the different kinds of innovation you need to know about in 2023. Joining us on the show is Anish Tawakley, who's the Deputy CIO, Equity and Head of Research at ICICI Prudential, to talk about how to invest in a prudent manner in this world which is seeing a rapid technological changes. Anish, thanks a lot for joining in. You know, at the onset, I wanted to ask you about what exactly is innovation in investing?
So innovation deals with all the changes that are taking place around us, right? And very often we think of innovation as being synonymous with technology, but that's not all innovation is about. I mean, obviously there's innovation in technology. You know, we've all seen the world when we moved from, say, LP players to tape recorders and now, you know, audio on demand. But actually innovation is much broader than that. Innovation is practically taking place in every industry. So for example, if you looked at airlines, the world has changed with the innovation that low-cost, no-frills carriers brought in, right? If you looked at banking, you know, we all used to go to branches to collect cash. Today we collect cash through ATMs and we don't even need cash because we've moved to other digital forms of payment.
I don't even remember the last time I went to a bank branch, to be honest. And you know, the other day I was trying to recall, where did I keep my passbook? I needed it for some reason to change some data on the Aadhaar card, but I couldn't even find that. So I get your point. I mean, things are changing rapidly.
Very rapidly. So innovation actually takes place across industries, right? And typically, like, where does it become relevant in investing? What you find, right, broadly you can group in any sector, right? You can group companies into companies that are struggling and there are companies that are winning market share, right? The winners are ones who are gaining market share and doing it profitably. They're typically doing it based on some innovation, right? So if you looked at the banking industry, banks that were better at, you know, expanding the ATM network, better at launching better internet platforms, mobile platforms, gained market share. Similarly, the no-frills carriers we talked about, right? Today, modern retailers are gaining market share. So typically in any industry, the market share gainers and the ones who are innovating. Obviously, there are some exceptions like commodities, there's very little innovation. But in most industries, other industries, you find innovative companies gaining market share. And if you enter these companies at the right time at a reasonable valuation, then you end up creating wealth.
So that's the million-dollar question, right? How do you figure out which is the innovation that you need to latch on to and when to enter? So first, let's talk about sectors like technology, where there's massive innovation happening. Also sectors like healthcare. What are the different kinds of innovation that's happening in these two sectors?
Well, you said healthcare and?
Technology.
Technology. Well, technology, it's really all over the place, right? Everything that you needed to sit on your PC for is now being delivered on your phones, right? Your phone has more computing power than most PCs would have had when they were first launched. So technology, it's a no-brainer, right? It's phenomenal. In healthcare, actually the delivery, like the way technology is being used both for diagnosis, for increasing access, and then for treatments, right? The treatments that are available today are obviously far more advanced than treatments that were available earlier. So obviously something has changed, right? The machines that are delivering them are superior, et cetera, et cetera. Similarly, the drugs, right? The drugs that are available today are all innovative drugs. In fact, the entire pharma industry, the prescription, the non-generic part of it is innovative. So, I mean, in both these industries, there's phenomenal innovation, actually, at every step of the way.
So, you know, how do you decide, right? I mean, we have a very helpful plate coming up in a bit on what is the innovation, you know, different kinds of innovation in IT, different kinds of innovation in healthcare. So, for example, in healthcare, right, I mean, you have API, formulations, generics. Now, in biosimilars, a lot is being done. Now, we know the listed players that have exposure here. But how do you decide how much of your portfolio goes into these companies which are innovating? Because trends are changing by the hour, forget about by the year. How do you decide how much exposure to have?
See, well, you always have to balance the opportunities that are available in the value space and then in the quality and growth space, right? So 2 years back, right, we thought all the opportunities were in the value space. Today, I think opportunities are more evenly distributed, right? So how do you decide is really based on what are the valuations and what is the market expecting. So it's actually good to, when you think of investing in innovative companies, right? It's not just the multiple that matters. You also have to say what are the market's expectations. Typically, you do well in investing in these companies when these companies beat expectations, when expectations are raised, right? It's not a matter of saying, look, 30 is a good multiple and 40 is not a good multiple. If a company is at 30 times but it misses earnings, disappoints, it's going to do badly. If a company is at 40 times and it beats earnings, it's going to do well. And therefore, it's good. It's very important to have a real good grip on whether the business model will succeed or not, and what is its potential for delivery if it succeeds. If your expectations are outrageous, then even if it succeeds, you won't make money.
Absolutely.
Right.
Okay. So, you were briefly mentioning banking. I want to take that discussion forward. Do you have any stats of how much the deposit market share of private banks has risen over the past many years, right, compared to PSUs because of the whole digital and technological innovation that we've seen with private banks?
Yeah. So, I mean, there's very good data, available on this. And you can see that the private banks basically have gained share from the public sector banks. And the reasons they did it were because they were able to, they use technology more. They use technology both to reduce the cost of service and to improve the quality of service, right? So this whole notion of targeting the more affluent customers with relationship managers, right, who had with them technology at their disposal, which helps them deliver better service. The whole notion of sort of not having the customers go to the branch but be served without having the need for large branches or branch staff, serviced at least, has been what is driving these market share growth. And it's very clear that these banks have innovated more and have gained market share pretty substantially. Right?
Okay. In fact, we have a very helpful table there, on what the innovation has been, what the impact of innovation has been on private sector banking versus PSUs. So PSUs have lost a lot of market share. There we have a helpful table on the screen. So way back in 2018, I think the PSU market share was about 50%, and now it's come down to, almost 35% or so. And private sector banks has picked up. But the question that we're asking now, Anish, is that, a lot of this is perhaps in the price, you think? Because a well-known story that a lot of these banks, whether it's ICICI Bank, HDFC Bank, Kotak, are doing a lot in digital lending, lot in digital banking. Has this innovation been priced into these stocks, you think?
See, with banks, banks are a cyclical industry, so it's difficult to say what's the right price unless you have a view on the cycle. And I wouldn't want to comment on the valuations of specific banks, but broadly we are positively, we view the Indian economy as well positioned from a cyclical perspective. So there should be opportunities broadly in the financial services space, not just banks.
Okay, okay.
Yeah.
So coming back to the different types of innovation, just trying to understand, what else is out there. There are several sectors, right? I mean, we spoke about some of them, whether it's airlines, banking, but now there are new age sectors coming through where there's a lot of innovation happening. Since you have a fund as well, you're investing in this space, tell us about the different types of innovation that we're looking at.
Oh, so to your point, right, starting out, there's a phenomenal amount of radical innovation that is taking place in this space, right? Who would have thought of electric vehicles a few years back, or who would have thought of new age energy sources, right? Some time back, we thought of solar energy as something that, it's part of the hippie culture where, if you're out of the mainstream, you talk about these kind of things. Right, all of that is now happening as we speak, and it's actually penetrating our homes. Right, the amount of soon we'll be using solar energy, or we maybe already be using solar energy in our homes without actually realizing it. Right, so there's electric vehicles, there's new energy sources, there's the energy field is energy and transportation is seeing phenomenal.
That's largely radical innovation.
Radical innovation, yeah. Okay. But then you have people coming up with new business models, right? Yeah. Which is using existing technology, but delivering it in a certain different way.
So that's
for disruptive. Example, disruptive or incremental, both, right? Disruptive and incremental, both. So, for example, and it's almost very often difficult to categorize it, right? If innovation is successful, it may seem small, but it causes a lot of disruption, right? When we moved from phones as primarily a voice device where you paid for voice to when voice is free, you would have thought it's a small change in the pricing model. But the amount of disruption it's caused is phenomenal.
Yeah.
Right? So disruption, whether it's radical or the amount of disruption it causes is often only known with hindsight. Right? But the point is innovation can take place either in fundamentally new products or delivering similar products in a different way, right? Which enhances the value, which makes them easier to access, or using different processes, right, to deliver those products. So, frankly, Sonia, it's beyond a point not really meaningful to say whether it's going to be disruptive or not. Every company tries to be disruptive. You have to look at it as things are happening and saying, look, are the changes that is these companies being able to translate this innovation into market share gains and are able to do it profitably? Because if a company is able to translate its innovation into market share gains profitably, then it's earning the right to grow and it's winning in the marketplace. That's what you need to look for.
So do you want to share some examples with us? Maybe not, I mean, in the listed space. These are not recommendations, of course, but examples of companies that have successfully, made that transition.
I wouldn't want to take names, but yeah, low-cost carriers made that transition.
Okay.
Let's take examples of industries where initially you had innovations that were unsuccessful, and then now we are having a spate of innovations that are successful. Initially, a lot of people came into retailing, right? Modern retailing. You had a lot of blow-ups there. But now you have companies doing modern retailing, doing it successfully and profitably. What's the difference? The difference is that the first generation of modern retailers, right, thought of retailing as just the stores. So it was a real estate game, right? Let's open as many stores as possible in convenient locations. But in retailing, actually, the store is just one end of the business, right? It's not the entire business. Retailing is not just about stores, it's about the entire supply chain, right? So a good retailer not just has good stores, but has a really efficient supply chain, controls the warehousing, has really good links with manufacturers which allow it to control the products that are supplied. So you were talking about how do you decide what's successful or not. You have to actually spend time to understand what is it that will allow this innovator to deliver better value or a distinctive experience to the customers. If you can convince yourselves of that, then you should take the story forward.
That's why folks like you are there, right? To do
hopefully we
to do all the research and put it out there. But let's do one thing. Let's take a short commercial break. A very interesting conversation. Don't go anywhere. Come back in just a bit. We'll continue to talk about innovation in investing.
Pull up the flicks and I take it on gear. Pull up the hands and I feel more gear. I digga don. I sicka don. Take it on the roll and the show and the pull up the flicks and
Volkswagen Virtus, German engineered for unmatched safety.
जब आप अपने जिगर के टुकड़े को हवा में उछालते हैं तो घबराते नहीं हैं क्योंकि उनको पूरा भरोसा है कि आप उन्हें संभाल लेंगे। उसी प्रकार 2.5 लाख से भी अधिक लोग रोजाना मुथूट फाइनेंस पे भरोसा करते हैं। मुथूट फाइनेंस गोल्ड लोन, खोलिए खुशियों की तिजोरी। आज ही कॉल कीजिए 1-800-313-1212।
Whenever I had ice cream or cold water, I would experience a sharp shooting sensation. So I just kept ignoring it. Even my hot chai was giving me the same amount of discomfort. My dentist recommended Sensodyne. So now I can be completely carefree and sip my hot cup of tea. It really works.
Hey, कमाल की कार है ना? हमें लेना क्या?
सर, कमाल की कार के लिए कमाल का पेट्रोल भी चाहिए, एकदम टॉप का, जो हमारे इंडिया में मिलता कहाँ है?
अरे सर, पर इंडियन ऑयल पे मिलता है। प्रीमियम कार्स के लिए इंडियन ऑयल ने बनाया है 100 ऑक्टेन वाला देश का सबसे प्रीमियम पेट्रोल, XP 100।
वाह, इंडियन ऑयल की बात ही कुछ और है।
इंडियन ऑयल, पहले इंडियन, फिर ऑयल।
Making the future truly forward and charting a path towards gender parity.
Women step out of the workforce at very predictable points. So they have these major life transitions and it's almost like you can map it out, and when that hits, they're likely to take a step back from careers. The question then becomes, what is it that us in positions of authority and power and influence are doing to ensure that it's just a step back? Because when women come back into the workforce, they should have an encouraging environment.
A mega initiative to make gender parity an attainable reality. HSBC presents CNBC-TV18 Future Female Forward, the Women's Collective.
Presented by HSBC.
Co-presented by HCL Tech.
Knowledge partner Deloitte. Industry partner FICCI. Associate partner Reliance Industries Limited.
The commodity markets are in a bull run of sorts.
Whenever the world moves from a recession to growth, there is a surge in demand for commodities,
where crude, sugar and metals are surging. Which commodities should be a part of your portfolio? How can you profit from the current surge in commodity prices?
Has the Indian investor warmed up to commodity in their portfolios? And are there enough instruments available?
Get the complete lowdown on commodities, all the exclusives with analysis and experts from across the world. Commodity champions at these times. From David to Goliath, from the smallest business ventures to multi-million-dollar global corporations. Meet the movers and shakers, today's newsmakers, and tomorrow's leaders. Understand what makes markets move, how companies make quantum leaps, and how giant corporations stay ahead. Get the biggest business stories of the day, power-packed into 30 minutes on Business 360 at these times.
Welcome back to Smart Money. We're here talking to Anish Tawakley, the Deputy CIO Equity and Head of Research at ICICI Prudential Mutual Fund, about innovation in investing and what different sectors are going through in terms of innovation and how you can use this knowledge to make your investment decisions as well. Anish, before the break, we were talking about several sectors, right? I want to focus on NBFCs because there's a lot happening here and it's sometimes very hard to keep up because the competition is, there is competition from NBFC players to the banks. Banks are eating a lot of the market share. There are these new age tech companies coming through as well, fintech companies. So tell us, what is the radical innovation that's taking place in NBFCs?
See, what is driving that innovation, and I'm not saying it will be successful, in fact, I'm fairly skeptical about how successful it will be, is that you've got much more data about individual customers to help you make hopefully smarter decisions, right? And what we are seeing is a lot of financial institutions using that data to arrive at lending decisions. But I think here is one place where we at least are cautious about its ultimate outcome, because when you're lending, you have to judge both the ability to pay and the willingness to pay. And you have to have mechanisms, collection mechanisms, to collect money if the willingness to pay is missing on the consumer's behalf, right? So a lot of the data that we get is about the ability to pay, right? Willingness to pay will be tested when people choose to act difficult. And my concern right now on the NBFC space is a lot of NBFCs have not built in the collection costs that will come up when there is stress in lending, right?
Okay.
So lending always looks good while you're growing very fast.
And while the economy is growing.
While the economy is growing. But it's when the collection is required, right, that particularly in unsecured lending, the jury is still out. Right?
Okay.
So yes, there is innovation, but some of it may not prove to live up to the hype that is being
So for someone who's perhaps looking to invest based on innovation, you would suggest otherwise, that to be cautious in the NBFC space?
So you'll have to be very selective if you want to invest in NBFCs. I think, and that's one of the things that happens, right? There's a genuine innovation. It creates too much excitement initially, attracts too much capital, you have a period of churn, and then eventually a more stable structure emerges, right? So my point here is not that there's all NBFCs will not do well or anything like that, but to say that one has to be very careful. This is a bit like retailing, right? When you thought retailing is all about stores, I said, right? And it's not all about stores. Similarly, NBFCs are not all about disbursements, right? We haven't really tested the collection aspect of these NBFCs yet. So some skepticism is justified.
Any other areas where there's massive innovation happening, which is perhaps something investors should know?
No, actually, I want to step away from this notion of massive innovation in a particular sector, right? I think innovation is happening across sectors. Leave aside a few, right? Like commodities where there's very little room for innovation. A commodity company, if it has a low-cost mine or a low-cost oil source, can do well even without innovating, right? But in other businesses, almost as a rule, right? If you look at companies that would be gaining market share, they would be innovators, right? Whether it's financial services, whether it's retailing, whether it's consumer goods. If you keep making the same fan, same mixie, whatever, you're not going to win, right? So in almost every sector, right, you can see that innovation is happening.
Okay. So, you have a fund, there's an NFO, the ICICI Prudential Innovation Fund. So tell us a little bit about that. I want to understand more about what kind of companies will you be investing in? What is the time frame? Because, these kind of thematic funds, the concern is that, there's a lot of disruption happening. So what happens then? I mean, is it like a 12-month time frame, 18-month time frame where you revisit then? And what kind of returns can one expect if they invest in a fund like this?
The last question is easiest to answer because I'm not going to answer it. But more seriously, look, as I said, right, like 2 years back or even a year back, we thought all the opportunities are in the value space. By value space, in simple terms, it means companies that are struggling but will recover, right? And growth was being overvalued. Now we think the opportunities are more evenly balanced because the growth companies have corrected a lot. Expectations have become more realistic. Now coming to how you think about returns. See, typically when you're buying innovative companies, you would be paying a premium, right? Now, and then what I'm not in agreement with is this notion that hey, these companies will do well 5 years later, right? Actually,
but you don't generally pay a premium always, right? I mean, just to give you an example, correct me if I'm wrong. Say a Tata Motors, right? They are innovating in a big way. They're doing EVs. They have, they're doing very well over there. But the stock is still trading.
I can't talk about specific stocks.
Discount to its, historic valuation. This is just an example.
Yeah.
But I'm saying it's not. You don't always end up paying a premium.
So there are some exceptions, and I'm sure there are some exceptions. And these exceptions, without going into the specifics of a company, could be that innovative company has some balance sheet issues, etc. Or while it's innovating, the cycle is very negative. The industry cycle is very negative. So those will always be there, but in general, you'll find that you're either buying struggling companies or you're buying the winners, right? When you're buying the winners, you will be paying a premium, right? In general, one should go in with that mindset. But my logic, the way we think about it is that when you're paying a premium, you have to be more demanding about how they meet expectations, right? So it's not about sitting around and saying, oh, 5 years later, this company will do well. It's about saying, look, what is this company committing to deliver, and is it delivering quarter after quarter after quarter? If it's repeatedly disappointing, you have to revisit your thesis.
Okay. Just to summarize then, before we let you go and before we end the show, any final thoughts on what the big innovation could be, perhaps? What the big disruptors could be, say, in the next 1 year?
I think certainly there will be disruption in the energy space. There will be disruption in the transportation space. That is for sure. But there will also be disruption, not disruptions, but huge changes, particularly when you look back over 10 years. That take place across a broad set of industries. And some companies will do better at it than others.
Okay, on that note, we will wrap up with this discussion. Thanks a lot, Anish, for joining us here in the studio. And thank you to our viewers for watching. Keep writing to us. We love receiving feedback from you. Have a great weekend.